Traders, before you go diving into dollar, yen, or even buying the yen, I want us just to take a moment and take a look at some really key indicators that could actually be pointing to a short-term reversal. So in this video, I'm going to go through maybe why we shouldn't be so aggressive buying yen right now. Okay, so you know that I've been a big fan of being a buyer of the Japanese yen. We've been talking about it ever since we kind of breached down into this 155 level. We've been looking to buy the Japanese yen, or I have personally, as the market has been pushing down, because there's been a lot of positivity around the situation in Japan and a lot of negativity around the situation in the US. Now, the market has drove down into this key area, this 149 level. In the week ahead analysis video, I pointed out that this is a pretty key level. You know, this market has been in and around this area in the past. It has found support from here recently. It has found resistance at this point as well. So it's a significant level because this is a daily chart and you can see these aggressive moves away from this point. So this is an area where the market deems as sort of value point, right? So we're at this 149. The market is starting to find some buyers here. We've had a little bit of a push up. We've come back in aggressively, sold off yesterday as US stock markets came in lower as well. Trump adding those 25% tariffs onto Canada and to Mexico. In Canada in particular, though, he's only added 10% tariffs onto energy. Obviously, he sees energy as a really important factor in driving inflation lower. But getting back to dollar yen, we can see that we were reacting around this 149 level. Now, I want to put a caveat on this. Personally, I do want to be a buyer of Japanese yen. I've made a video on this year thinking that this currency could be one of the best performing currencies in 2025 because of the fundamental factors that are behind the Japanese yen right now. However, we know markets aren't just going to move in a straight line, right? They're not just going to move from sort of being the weakest to the strongest and then dominate that market just to do it, right? It needs factors, it needs elements driving it. Now, one big thing that we've talked about and what we talk about on the channel is the commitment of trader reports, right? So I'm going to bring in these commitment of trader reports right now because they're showing us a really interesting factor within the market. Okay, so this is the Japanese yen futures. This is the non-commercial, so the large speculators. So those are your hedge funds and those that are looking to try and make money out of the markets. You can see that they added 35,000 contracts long. Okay, so that's a significant difference in the change in contracts. Okay, so basically what it means is they added actually 24,000 contracts long, but they reduced short positions by a further 11,000 contracts, adding up to that 35,000 contracts that they've added within the market. Okay, now if we actually look at this kind of really nice little visual aid here, it shows us that actually they are buying at extreme levels now. Now, if you're a fan of the channel and you understand the commitment of trader reports and the way I like to look at them, I like to look at when we reach extremes, what will that mean for a currency, right? So I'm just going to take off the small speculators and the commercials off of this. I'm going to show you what's happening right now. We can see that they've reached 95,980 contracts total. Okay, that's net, that's the longs minus the shorts. Okay, now if I actually just slowly scroll back in time, you'll notice that this is the most bullish hedge funds have ever been on the Japanese yen. Okay, surpassing those that we saw back in 2016, surpassing those that we saw back in 2021, and surpassing the most recent level back in 2024. So we're seeing a further extreme buying from the hedge funds. Now, yes, that could mean one or two things. It means that hedge funds see value in buying the Japanese yen. Why do they see value in buying the Japanese yen? Could be a factor of things. The main things that kind of stand out to me is the fact that the Bank of Japan are one of the only central banks that are considering hiking interest rates because inflation is moving higher. Okay, the recent inflation data showed that wasn't as aggressive as what the market was forecasting, but they are expecting inflation to be higher. Bank of Japan could end up hiking interest rates by at least another 25 to 50 basis points by the end of this year. That's what the market is trying to price in right now. And we're seeing an aggressive move for the Japanese yen. Another factor as well is global uncertainty. A lot of tension around in the world at the moment with tariffs and things like that. And we're starting to see the Japanese yen maybe even being used as a bit of a fuel, as a safe haven environment in those kind of conditions, right? We're seeing a lot of spikes in the volatility index. We're seeing the US stock markets fall. Naturally, the Japanese yen, because of its low yields, has been an area of safe haven for markets and investors. So we're seeing that kind of flow, that capital flow going into the Japanese yen. The third and final thing for me is oil prices. Japanese economy relies heavily on oil prices, and when oil prices are low, their economy tends to perform a lot better. One of Donald Trump's policies is to make US production of oil higher, okay, because he wants to drive oil prices lower, because he thinks that's the way he can counterbalance tariffs with inflation, okay. If he drives oil prices lower, which oil prices are a huge part of inflation, if he can do that and drive oil prices lower, he can drive inflation lower. That could also be a stemming factor for the Japanese yen. But I do want to add a warning to this. Now, what I like to use with the commitment to trade reports is extremes. This is an extreme, okay? This previously was an extreme. This down here was an extreme, okay? Look at how the market has reacted. When hedge funds were selling at the most they've ever sold at, what happened to the Japanese yen? It rallied. The market actually saw an intervention by the Bank of Japan, and we saw a significant rally. Now remember, this is a weekly chart that you're looking at here, okay? This isn't days, this isn't hours, this is a weekly chart. So a significant move in the market. When we got to an extreme high, what happened? Japanese yen sold off, okay? Because essentially what happens is hedge funds have no more room to push price, okay? They've filled their orders, so what are they doing? They need to get out of some of these positions, okay? So that's what they're doing at the moment. That's what they could start to do at the moment. Now we've reached this extreme, because that begs the question, are we going to see a reversal here, or are we going to see a continuation up to the next level of resistance? Now, the commitment of traders is terrible at timing things, but we can use it as breadcrumbs into what the hedge funds are doing within the market, okay? So I can see that at the moment that they are buying aggressively. Does that make me want to sell yen? No. Does it make me want to buy yen? Of course, because I want to go with the people that make money, right? But when they do it at extremes, it just adds a little bit of caution there for me to do that with. Another thing I want to add into this as well is my currency strength meter. Okay, I'm a big fan of using my currency strength meter. It's a popular tool that I use on the channel, and what it does, it just highlights to me what currencies are strong, what currencies are weak, gives me areas to focus within the market. We are now at +7, so if I actually just go over to the main strength meter here and just highlight this to you here, we are at +7. Now, that means that this is the strongest currency across the G7 currencies, okay? Now, what tends to happen is when we get to this kind of level, we either see extreme strength from that currency and it'll go and beat most markets, or we'll start to see a reversal in that signal, okay? You can see it here recently. We had a Japanese yen that was +7. It came off a little bit before strengthening again. Japanese yen came at +7. It came off a bit before strengthening again. This is what I feel the Japanese yen is going to be doing, right? I feel like we're going to see some short-term weakness, big move in strength. Short-term weakness, big move in strength. That's what I'm kind of getting from these reports at the moment. And if we go back to the Japanese yen, that gives me an idea of what could happen here. So I think two plays for me personally of what I'm going to be looking at for dollar yen. First play is I'm going to see if the market pushes through 149. If it does and it can hold below 149, I think the move to 140.50 is likely, and I would be looking to buy Japanese yen personally across multiple different assets, mainly looking at those that could include things like weaker currencies like the Australian dollar, the New Zealand dollar, Canadian dollar, potentially even Swiss as well. We know that the Swiss National Bank are cutting interest rates aggressively, but we do have Swiss inflation coming up, which could just put a little bit of a dampener on that if it doesn't kind of meet the requirements for them to aggressively cut rates again. Or what we're going to see is that sort of weakness move coming in before then a continuation, right? So I quite like this 155 area. The reason why I like this a lot is if we actually just go up to the weekly chart here, where I do most of my analysis, we can see that there was a really nice level here. There was this kind of move from 155 back down to 149, and then a small kind of breach of that level before then reclaiming it. And this was the level where I said, if that breaks, we're going to see some further downside in dollar yen prices. Now that we've had that, this could be a great level to get back into any kind of significant move for me. So I want to see, you know, if we don't break or hold here, if we don't get below 149 and the market does start to just give back a little bit of this move, I would like to see prices back up towards 155. Now, how likely that is, I don't know. The market's going to do what the market's going to do. But I still feel like the Japanese yen is a currency I want to buy. But is it at a point where I want to buy it? Potentially not. Hedge funds being at extremes could mean a short-term pullback, could bring prices to 155. So I'm going to leave it there. I hope you enjoyed the video. Remember, this is not financial advice. Trading on margin is high risk. Please do your own due diligence and research before making any trading decisions. Thanks for watching. If you did enjoy it, like and subscribe, and I'll see you soon.